Hi everyone, Daniel here from One Mortgages and Protection, your mortgage and protection insurance brokers. I hope you're liking the new video. I hope you're liking the content. If you do, please be sure to like, share and subscribe for all future videos and information on all things mortgages and protection related. Please take a look at our website by searching for One Mortgages and Protection or check us out on all social channels. Thanks very much and enjoy.
Hello, and on this episode of the Mortgage and Protection Podcast, we're talking all about mortgages for first-time buyers with Daniel Condren from One Mortgages and Protection. Daniel, thank you for joining us again. How are you?
Good, thank you. Yeah, really good. Got a different environment, different room. I thought it'd be good for the viewers to see a different background this time. So yeah, I'm all good to talk about first-time buyers.
Yeah, you've got a really good backdrop there, really lovely. So this is quite a lovely episode, isn't it? And topic to cover our first-time buyers. It's quite an exciting time, but also a daunting time. There's so much to learn and to know, isn't there? It can be quite a minefield. So let's get straight into these questions then. So to begin with, I mean, how is the mortgage process different for first-time buyers? Is it any different?
In a quick answer, it's not any different. It's the same. But when you're a first-time buyer, it's the complete unknown. So you don't know the small details, you don't know the information that you need, and the mortgage market is so vast and varied. How do you know whether you're getting the right advice, the right guidance, the right knowledge, whether you're asking the right questions? And in our industry, advisors obviously expect trust. So all first-time buyers have got to go with is kind of, am I getting the best deal? Am I getting the right knowledge? And do I trust my advisor? I mean, this is going to be something big for any first-time buyer when they buy a house. So the person that you trust to go through that process is really important. So for first-time buyers out there, make sure that you've done a little bit of research. It's from a referral from a friend or family, somebody who's trusted, that was a good experience. Now, if you're getting, a gut instinct that this guy's not very trusting or is rushed or it doesn't give you the time that that's needed, then that's, trust your instinct and then search and just do a little bit of research. So I would say go to 2 or 3 advisors and then go with the person that makes you feel the most confident and comfortable about what they're saying, what the details they're giving. So trust is everything. And not just for first-time buyers, for people that are investing in property or moving home. It's an extremely stressful process and there are thousands and thousands of pounds at stake. So you've got to kind of understand it's not like normal retail purchases where you're buying clothes or an iPhone or something small that's so much a month. This is a big decision. So first-time buyers need to kind of give it that weight and trust your advisor.
Some really good points there and tips. And it is, isn't it? It's one of probably the biggest investments you'll ever make. So you need to know what you're doing. And obviously, just following on from that then, I mean, what should a first-time buyer look out for? You mentioned, a few things there, but let's just go a little bit in more depth here.
So let's break it down. So the advisor is acting on your behalf to give you the best advice and point you in the right direction, get you the best deal, understand your circumstances. So a good advisor should be asking a lot of questions about you and finding really about you. But there are so many little terms throughout the process. You're like, I don't know what that means. I don't know what the deposit means. I don't know what a survey is on the property or solicitors or conveyancing. So it's like a different language. It's a completely new language for first-time buyers because they don't know what all those things are. So, if you're in doubt, ask the question. A good advisor should be able to inform you of the whole process, what you need and why you need it, because that's what they're there for, to give you confidence and trust in the process and understanding it. So deposit hacks and understanding how it works. So when I say hack, I mean, if you're buying a property, the bigger the deposit that you put down, you would typically get a better interest rate. Now, interest rate is everything. So the amount that you've borrowed, it determines how much you pay back, what's the interest rate, which is really important for anybody buying a house. So the level of deposit and how much savings that person has, or a gift, or wherever the money's coming from, is really important. Whereas other advisors might just be like, how much have you got? Right, I've got that, boom, and then get you the deal accordingly. But they might not go to that extra bit to explain the bigger the deposit you've got and the better deal you're going to find. So if you can get to the next bracket of, the loan to value of when you buy, it's really important to understand that. So they go in 5% increments. So the minimum deposit you can typically have right now is a 5% deposit in today's market. So the bigger you go, if you go 10%, you'll get a better deal. If you go 15% deposit, you'll get a better deal. But most first-time buyers don't have an unlimited amount of savings that they can just go and buy a house. So it starts at 5%. But we'll talk a little bit more about other ways that you can buy even without a deposit. So if your parents have got equity, they own their own house, or they've got other houses, there are actual schemes and ways that your parents and family members can help you get on the housing ladder, which is really exciting for first-time buyers.
Yeah, definitely. And like you say, we'll go on to talk about some of those schemes and the help that is available for our first-time buyers. And of course, you mentioned there's a lot of terms. There is a lot of jargon, isn't there, involved? So what's this then, Daniel? What is an agreement in principle?
Yeah, an agreement in principle, otherwise known as an AIP or a DIP or a decision in principle. So there are so many terms that everybody uses, whether that's from the estate agent, you buying with family, or the mortgage broker will probably give you different terms. But an agreement in principle is when the advisor has assessed your needs and understands your requirements of what you need, and then you apply to the lender. Now, an agreement in principle is that lender doing an assessment on the client. So they're looking at their credit rating, they're looking at their affordability, they're looking at them in the background of their circumstances, and they're just saying a quick yes or a no. So the agreement in principle is just agreeing the amount that you're applying for ahead of time. Now, this is a really, really important certificate or a stage, because the people that you're buying from, the estate agent, will want to have that certificate to prove that you've gone and spoken to an expert, you've been through a bank or a broker to check your eligibility. So an agreement in principle is just to check your kind of financial position, whether you've got a good credit rating, the affordability is there, and it provides a certificate to say, in principle, yes, you can borrow the money, and it's done. So it's as easy as that, but I wish that it was as easy as that, because when you then complete that and go to a full application, that's when all the warnings should be there of, is the information that's been provided correct? There are dozens of things that could go wrong once the application has been fully submitted. So the agreement in principle is the easy bit, it's the fast bit. But if the broker's done their job correctly, that shouldn't be a hassle, it shouldn't be done. But just, the agreement in principle is a very important part. But equally, we kind of say it's sometimes not worth the paper it's written on, because unfortunately customers might decline to give you the right information or provide the wrong information. So therefore, when we do an agreement in principle, it comes through and it's wrong. So therefore, you get customers' hopes up that you're going to buy the house and everything goes wrong. And then when you actually need to see all the documents, which is like the pay slips, the bank statements, and go through all the questions, it sometimes falls apart at that stage. So some brokers get all the details up front and all the pay slips and all the evidence very early, which is a good thing, because then they can give you the right advice and check that there's not going to be any problems. And then some advisors get everything right at the back end after they've done the agreement in principle, and the things don't match up. So you get a lot of customers that get disheartened and they can't buy the house because the information wasn't correct. So my advice is always be accurate in the information that you give, and then the agreement in principle, all being well, should be bob on. It should be perfect.
Some good tips there again, and just something to definitely bear in mind. Now, you've already touched on borrowing and deposit when it comes to first-time buyers. Have you got anything else to add to that, or do you think we pretty much covered that there?
With the borrowing amounts, I think the borrowing amounts is determined on income. So we've done another series of talking about income and how it's afforded. So check out our other videos or our website to understand affordability. But just the same as any mortgage applicant, when they go for the mortgage, their income, their affordability, and how it's made up is looked at and questioned. So for a first-time buyer, it's exactly the same. Do you have an employed job? Are you self-employed? And how is that broken down? So the affordability piece is very important as well, because we've done the agreement in principle based on how much you earn, what are your outgoings, what are your commitments. So yeah, making sure that your income and how much you can borrow is calculated correctly is very important. So yeah, you do need to be working. Unfortunately, we can't get you a mortgage if you've got no income at all, which is, this is certainly for a first-time buyer residential mortgage. If you were investing in property, it's slightly different. So if you were doing buy-to-lets and other things which we've talked about on previous episodes, but yeah, first-time buyers, definitely your income is very important and affordability is important. So the advisor will talk to you about that as well.
And actually, just as a follow-up to that, what about, a young couple? They've got different, I guess, wage brackets. How does that all come into play?
Well, if you're a couple and you're buying as a first-time buyer, it's good because there's double the income. So there's two incomes to consider. Whereas if you're buying on your own, you might not be able to reach the level that you're wanting and what's affordable. So the first thing you want to do as a first-time buyer is understanding, how much can I go? What kind of properties do I know? And that's kind of the misconception, because every lender is very different. You can go to some lenders and they may give you an estimate of how much the mortgage is going to be and how much everything is. And then you go to a different lender and they're much more generous of how much they can afford and what they is. So that's a big thing, especially for a first-time buyer, because you're basing your shopping list and what properties you're going to go based on what the advisor tells you. So if you can't afford a £200,000 house or a £250,000 house, you're going on what the advisor is telling you. Now, the way the advisor will work that out is, how much deposit do you have? And then what's the maximum that we're going to be able to reach on your commitment levels of what you've got going out, like loans, car finance and things like that, and what your income is. So if your income varies because you get bonuses or you get commission or you work overtime, then it's very important to see an advisor first, because he will be able to understand and break that down to say, this lender is really good in that area and they'll be able to help. This lender is really good in this area and they'll be able to help. So as a first-time buyer, you really need that extra helping hand. You need that extra breakdown of how everything works so you understand it. But trust in the advisor, again, it comes back to that trust and confidence to understand, am I in the right place? But most first-time buyers, Tessa, they would just trust and go, can I buy this house? And they come to you like desperate to say, can I buy this house? Can I buy it? And then after a kind of a quick assessment, you go, yeah, you're fine. That's fine. But they kind of do it the wrong way around. So my advice would be, always speak to somebody like me or a broker ahead of going to see the estate agent or going to see or view a property, because you don't really want to get your heart set on it and get your heart broken because you've been to see this house and you go, oh my, you start dreaming of having your own house and having what's yours and everything, and then it can't be a reality. So then we've got to think outside the box and use parents' income and your brother and your sister and find somebody that would potentially go on the mortgage with you. And we don't want to be in that position of, you've put an offer in, it's been accepted, and you can't even get the mortgage because the estate agent's going to be upset with you. The vendor selling the property is going to be upset that they've had their time wasted. So yeah, try and put things in the right order of how you do it, which speak to us first, and then you're good to go.
Yeah, there's nothing worse, is there, than disappointment when you found something you love. So yeah, definitely preparation is key. So let's move on. So we're talking credit scores now. So how do I know what my credit score is and how do I improve it?
Yes, so there are a number of credit reference agencies out in the UK. So to name a few would be Experian, Call Credit, Equifax. And what they do is just assess your credit score, your credit rating. So it's very important to kind of check that and see where you stand and if you do have a credit history. And I think first-time buyers sometimes get caught in this, oh, I don't have a credit score. And, if you've got a bank account, the likelihood is that you've actually got a credit score. If you're over 18, you have got a score. It might be low, but you do have one. And even if you can't, it's not the worst thing in the world if you don't have one yet, or we can't be found with a credit reference agency. Some lenders actually don't use that. They're fine with the fact that you don't have a credit score. It's all dependent on the deposit level and finding a lender that would be comfortable with it. But it's very unlikely and unheard of that if you can't be found at all and you've got no financial history at all in the UK, that you wouldn't be able to get a mortgage. But checking your own score is very important, because you kind of might obsess about it and going, I need to improve it. And then there's another myth buster of people tell me that I need to get a credit card and I need to do all these things and get, have I got any credit? And the number of customers that have come to me literally on the week that they're going for their mortgage application and say, I've just done a credit card. I've just got a credit card because I was told it would improve my credit rating. Yes, in principle, if you've had a credit card for a couple of months and you've tested that you're a good customer with credit and you can repay that credit card, yes, it will probably update your credit rating to say, hey, we've got some history on this customer. But it won't happen straight away. Your score has to improve over time. So yeah, for those first-time buyers out there that think that they're going to get a credit card straight away and just test it, that can sometimes have an adverse effect on them, because you've literally just gone out and got a new loan or a credit card the same time you're going to get a huge, big loan for a mortgage. Sometimes that can adversely affect your rating and lower your score, because it's still just assessing where you're at. So, of course, if you're thinking of buying a new car or taking any credit, speak to a broker first if it's going to impact your ability to get that mortgage. And typically it shouldn't if you've got a good enough affordability and everything's fine, but it can affect it if you go for something really big, like a big car commitment that's, I fancy a new BMW or an Audi or something. And then you go, oh, well, now you've really scuppered your chances of affordability. It's not the chance of saying, no, you can't get the mortgage. It just might mean the difference of getting a bigger mortgage compared to a smaller one, because you really want this really big, nice house as a first-time buyer, but you've just swallowed some of your affordability because you've committed to a car finance or borrowed on a credit card. So, yeah, I hope that gives you a bit more insight to it.
Definitely, you really have to weigh up your priorities, don't you, and kind of be sensible, I suppose, when you're looking for your first home. So let's talk about the help now that is available for our first-time buyers. But I have just got a question here that asks, what is a first-time buyer ISA, and do these still exist, or are they known as something else now?
Yeah, so it's a lifetime ISA now. So they did have two different types of ISAs to help first-time buyers. They had a Help to Buy ISA, but they scrapped that, I think, back in 2019. So you couldn't accept any new options for a Help to Buy ISA. You can still get the lifetime ISA that you can go in and buy, but the government schemes are there to help first-time buyers or people just save. So any incentive the government can give you as tax-free, you want to look into that and check it. There used to be other schemes available to help first-time buyers, which is known as a Help to Buy, but the Help to Buy is no longer, or is going, it's no longer available, which it doesn't sound particularly good for first-time buyers, but there's always lender incentives. There's always things that are available. But if you've got a 5% deposit, you're still good to, like, for example, the mortgage guarantee scheme with lenders. There's shared ownership options. There's also what we call a joint borrower sole proprietor, which if your parents or somebody in your family has got the income to support a first-time buyer, you can actually purchase the house with your parents or with your grandparents to have that joint borrower, to have the affordability up, and there's only one owner. So you also save on the stamp duty as well, stamp duty element, which is a big consideration for first-time buyers.
So some really useful schemes there, to help our first-time buyers get on the ladder, because it can be difficult, can't it? So let's go into more detail about the fees now then. You've already touched on a lot of them, deposits, stamp duty there, and all of that. But what sort of other fees are involved when buying your first home? What are we looking at?
Yeah, what you're looking at. So the fees from every direction. You've got to look at the funds and that's a part of our job as well, is explaining the financial breakdown of what all the fees are associated. So a broker should transparently show you what all the fees associated with the mortgage are. So that can be lender fees that comes with the lender for the deal that you buy, and some deals come with very low fees or no fees. Others come with an arrangement fee or a lender fee that comes with that. There are other fees such as the solicitors. A good solicitor, well, any solicitor would charge you a fee for their services. So you've got to check whether that's competitive and correct. Your broker fee, if your broker does charge you a fee, it's okay for the customer to say, why are you charging me that fee? Because the difference of quality and the difference of what the customer is going to receive is really, really big. So you might not particularly get the time that you deserve, or you might not get the service that you demand as a customer. But when you pay for a fee, then that's what you're paying for. You're paying for the service of it. If you took a whole of market broker that didn't charge a fee, and then a whole of market broker that did charge a fee, then you would kind of ask, if I was a customer, I'd be asking, what's the difference? And you get what you pay for in this world. So whether that broker that doesn't charge fees, maybe they're just super fast, super efficient, and they don't give you the time to explain or go through everything, but it's just about the experience, where our feedback is that our fees are justified and deserved purely because we give all the information that we needed. We're still fast, which is a good thing, and it's fully trusted that you're happy to pay that fee. But in a world that's complicated like this, you have to differentiate between the people that are free, but why are they free? If they want higher volume and they want it, that might mean that they don't have the time to update you or stay with you or give you the communication that you need. Whereas a broker that pays fees, you certainly shouldn't be not informed or not updated with what's going on, or felt a lot more comfortable. But that's typically what the fees are for when you pay a broker. What else is there to pay for? A survey. So a survey on the property. If you're going to buy a house, you need to check whether the condition of the property is fine. Now, most lenders will conduct a survey on your behalf to check that the property is in a good state of repair and a good level. And most of those are free with the mortgage product. But that's just a basic valuation or a valuation for mortgage purposes. So they will be happy to lend on the property if all's well and everything's fine. But if I was buying a big property, I would want to do my own due diligence to check that the electrics are fine, that the gas is fine, that there's not any movement on the property or subsidence or heave or something that's gone wrong in the past. Whereas if you have a survey on that property, then that would typically pick it up. And that's why you want to have your own practice and due diligence to check that it's fine. And it helps with the kind of the negotiation of the property. Whereas the estate agents pick the value and valued the property and say, look, we're going to sell you this house. But estate agents differ in their opinion of the market and what they can sell it for comparatively to what a surveyor would think. So that's why they might not admit it, but valuation managers or estate agents don't really have a good relationship with the surveyors, or they try, because the estate agent will overvalue a house and say, yeah, we can sell it for $500,000, no problem. And then when it comes to the mortgage and the reality of the purchase price, the surveyor would say, actually, we don't think it's worth 500,000, and it's been downvalued. So when your property is being downvalued, this is a big point that first-time buyers or home movers need to understand, is there may be a down valuation, which is good for the buyer, because you have to renegotiate the price because it's not actually worth what you've offered. Estate agents hate it because it means that the buyer cannot proceed because the house is not at the value that the offer's been accepted at. So they sometimes overmarket the price at estate agencies, and the surveyors has to bring them back down and say, actually, in today's climate, it's not worth what it's saying. Now, if that buyer was cash and it was completely cash, then it's their decision. If they want to buy it at that value, obviously take the opinion of a chartered qualified surveyor to say it's not at that value. That's really, really important. And if it's cash buyer, you can still purchase it. Your solicitor may warn you against that because they're there to protect you as well. And it wouldn't make sense to me. But if it's worth that and you're going to do that, then that's fine. But we can do another episode on what happens if your house gets downvalued. What happens? What does the buyer do if a house has been downvalued? And how do you go back to the estate agent and say, well, I'm not buying it at that offer. I want to either pull out or renegotiate the price, because the next buyer will have to go through that as well. So yeah, that's so the survey is another cost that's, I suppose very important for the buyer to understand, especially if you're putting in such a small deposit. You want to make sure that your money that you've invested in that house, the house is worth what you're buying it for, and that's why a survey is important. And then in relation to other costs, insurances are really important as well. So any good broker will advise you on insurances that are associated with the house. Now, these include buildings insurance, contents insurance for your belongings and the building itself. So that's things like fire, flood, burglary, anything that goes wrong in that property. And then also you as the buyer, you also want to be insured for yourself, that if you can't keep up to your monthly mortgage payment due to illness, or you pass away or something like that, and that's more commonly known as life cover. So I would always recommend that you look at life insurance, life cover, illness cover, whether that's critical illness or income protection. So these are all insurances that are out there, and that's another massive market, and it's vast, and the unknown of going, well, what do I take? Do I take this? Do I take that? Again, a good mortgage broker and a good insurance broker should explain the what you need, why you need it, and then give you the full picture so that you can be well informed to say, yeah, thank you for your advice. I think I want some of that. I understand. Yes, thank you. And you're completely within your rights as a customer to say, no, thank you. I've reviewed it. I'm good. I don't need that insurance. And then you don't need to take it. But, definitely please just take the advice and what's out there, because it would make sense to you and go, actually, yes, I've just taken a really big house and I would like some insurance, please. So if you do need any insurance advice, obviously reach out to us or a broker that's qualified. So that's the insurance side as well.
So yeah, quite a few costs there to consider, but it ties in, doesn't it, with the process. And of course, we have covered an episode on mortgage protection, which is on the website. So we go into a little bit more depth, don't we, Daniel, there with all of that. We've covered an awful lot. If we have got any first-time buyers listening, obviously we've thrown an awful lot of jargon and terms and everything at you. Daniel, what would be your final thoughts for our first-time buyers? Any last-minute advice for them?
No, just to recap and refresh what I said right at the beginning is, as a first-time buyer, it's unknown. You should, a broker or anybody should welcome that information, those questions. If in doubt, ask the question. And if you can't get a good answer to understand what things are there and why, then I don't think it's a good investment for you to use that particular broker. So go on to reviews, get a friend or family to recommend somebody, or just do a little bit of research to what their experience is, and do they deal with first-time buyers? Are they the right type of broker for you or the right bank for you? But there is so many deals out there now. A first-time buyer should understand that you're looking for the best one, and the best one might be the cheapest, which is good because you're going to save money, but also the best broker out there might be the one that understands you. So the broker should understand you and your circumstances and how you're feeling. If they're not really taking into account how you're feeling as a first-time buyer, then in my opinion, they don't deserve your business.
There we go. Well, thank you for that, Daniel. Always an insightful. You always give us an insightful information. Sorry, it's been really good, and hopefully will help a few first-time buyers out. I'm sure we'll catch you on another episode very soon. But you take care.
Thanks.